Thank you for joining me. I'm Alex, and I would like to have a look at Sony. Now, what Sony does is they make a PlayStation, they build computers, and they have a lot of media, as in movies and music. So all in all, slightly diversified towards tech and media. And current price is $60.41. Market cap is $74 billion. Dividend is 0.6% with a payout ratio of 2.8%, which is literally the lowest payout ratio that I have ever seen, which means definitely a good thing. Not sure if a dividend yield of 0.6% really matters that much. Current revenue $79 billion, which is slightly up. Earnings $8.4 billion, which is up a lot from the previous year, not up a lot from the year before that, but definitely going in the right direction. And a PE of 13, which is pretty nice. Not really great, but pretty nice. So total assets $192 billion, total liabilities $152 billion, and a total stockholders' equity of $34 billion, which is up a lot, and definitely not terrible. So this year there's no new PlayStation coming out, which is not really a problem. Next year there will be a PlayStation 5 out, and I expect the sales to be very good. The problem is that doesn't necessarily help Sony any, and the same goes for Microsoft with the Xbox. Generally, they lose money for every single PlayStation they sell, which means they pay about $100 just to get a reasonable price on the product when it first comes out. And they intend to make the money back through digital sales and game sales and all of that. So when it comes out, the PlayStation will not make Sony any money. It will cost them money. So I expect the revenue to be up a lot next year, and I expect the earnings to be down significantly next year, which is not a problem because generally the price for Sony does go down. The price that other people pay for the PlayStation does not, so it kind of evens out after a while where they don't lose money on the PlayStation. So with all that said, it seems like pretty much everything is going in the right direction. Revenue growth of 1% is negligible, but certainly not going down. Earnings are going in the right direction. PE looks pretty good. The balance sheet looks pretty good. And obviously the dividend yield is negligible, but the payout ratio is quite nice. So to sum that all up, I think that Sony is a pretty good company to invest in right now. Obviously, you should do your own research, but balance sheet looks good, PE looks good, revenue looks good, outlook is good. I don't really have any problem with this right now. So for a growth investor, obviously look somewhere else. For a dividend investor, I think this could still make sense because I would expect them to increase the dividend pretty much every year. So the payout ratio of 2.8% is pretty much nothing. So they could be increasing the dividend significantly. I'm not sure if they're going to do that, but I think over the long term, the dividend is going to grow. And I think that for that reason, you might want to maybe open a very minor position in Sony in a dividend portfolio anyway. For a value investor, I think that everything looks amazing. So balance sheet looks good, the PE looks good, the dividend is and the growth is all right. So I think that for a value investor, this looks pretty attractive right now. So I think that if you're a value investor, you should probably look into this and do some research, see what the outlook is. But I think it looks pretty solid. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.